Well, it's the last full trading week of 2018, and Marvin Guillermo from StockSmart is here with me to tell you guys how to position. Now, apart from Miss Universe that are making markets and the whole newsroom really jittery today, what's going on with the local bourse? So we've seen, Marvin, a pretty steady rally at the early part of December. Does it still have steam to go even further?
Okay, first things first. From the last time I was here, we're at a better position already, as verified by the bounce from the 6-8 support, which is also confirmed by a lot of the things that have been a bit negative at the start of the year. People were pegging inflation to be bad. People were even thinking it would go above 7, but we've seen it taper off at 6.7, and then the last disclosure was at 6. So the worries of inflation is somehow it has somehow dissipated for a bit. Then part of that, also part and parcel of that, was the high movement of oil and the US dollar, which have all slumped also over the past few days. So what you're seeing in the charts right now is pretty much verified also by market sentiment that the fear of what could be is now a bit gone already. Please remember, inflation, when inflation is high, the common tendency for people will be, I'll probably not spend more because prices might just go higher. But now with that fear a bit dissipating, as the government also has created measures for it, you can expect, and there can be an expectation of more spending for people, which is reflected at the chart. So 6.8 was a good support level, but you've plotted the 200-day moving average there, which is, for me, in my perspective, one of the strongest
this one, the yellow line right
resistances that we need to watch out for. A few days prior to that, we broke out of it, which I was telling people, if we break out of that, stay above that level, we turn bullish already, but it did not hold. That's one thing. But MACD is still above 0, denoting that there's still a bullish sentiment into it. So if I'm a trader, I'm someone who's watching the market from a broader perspective, I'd watch for that 200-day moving average, which is around 7,570 right now. If it stays above that, I believe that for next year, we could expect a larger movement up as well. And I've been sharing this to people that if you look at the market from a 10-year perspective, 2008 market crashed. 2009 to 2010, it rallied a bit. Then 2011, it consolidated. Then it rallied up until 2013. Then it crashed in 2013, moved up 2014, crashed 2015, moved up 2016, then crashed again, then rallied last year. We're at the point where we came from a rally last year, we're down this year. If it follows its trend, 2019 should be a better year for the index as a whole. That is pinned also if the market stays above 7,570.
Okay, Marvin, now just for our viewers here, we have opened nevertheless below 7,500. That's at 7,490. That's down a touch for, well, actually not a touch, quite significantly actually, 0.4% now. So again, you know, below your 7,563 200-day moving averages. Now you did say that the downside risks are dissipating. Are there still some upside?
So this is a confirmation though that if we fail to break out from that 7,563, 7,570 level now becomes a resistance. So a downside risk for it could probably bring the markets to several support levels, 672, which is something, 74, 72, then 68. Those are the support levels that I could watch from a short to mid-term perspective, the strongest being at the 6-8 level. So this one, I wouldn't be concerned about the intraday movements or even the daily movements, because the trend and the range is stronger than whatever movement we are seeing on a daily perspective. So this one is probably because the market also has rallied from 6.8 to where it is right now. A lot of the stocks, there are profit-taking going on in a couple of stocks, because when the market hit 6.8, a lot of the stocks became ridiculously cheap. But there wasn't, you have to remember the earnings, it's not as compelling for people to come in on the broad range.
Which I actually just pulled out for you here. So that's your PE ratio of the P-comp. Yeah, go ahead.
So PE ratio wise though, at a certain level, we've become reasonably cheap. That's why people started to come in. But it's different when people are buying cheap as compared to they're compelled to buy higher because there's an expectation of something better later on. So the buying at 6.8 was because we were cheap, but you can expect more profit taking because there's still nothing compelling that will cause you to buy higher. So I'd still look at inflation for next year, which I think it might be better already for the very reason that we have a high base this year, and then there are a lot of measures that have been created to somehow taper it for next year. So the expectation of a lower interest rate can fuel people also to buy. You have to remember, interest rates, oil, and everything else that have gone this year were all pinned on inflation. So if inflation is better, that might bring more investors into the table. As what we saw, no, there's more foreign buying coming in this month.
Absolutely. So, but then you can see, as you mentioned, the PSE going back to more expensive levels again. So this was the, previous level, and we did already see a slump. Up to what multiple are you looking at for them to be picking up? What can you say is expensive already?
We've hit 18 to 21 range. Every time we go above 20, we've hit levels of 22, 23 in the past. Every time we hit that, you would see large corrections. But anything above 18, 19, on my perspective, with nothing compelling to cause people to buy, might be a hindrance. If there's a lot of things compelling, like 2013, there were a lot of economic indicators that we were beating a lot of expectations. Even if the PE at that time was high, people were compelled to buy. Right now, if we go higher with nothing compelling to cause people to buy, you might not expect people to want to buy it at the higher levels.
Okay.
And we have to consider that vis-a-vis other markets in the region,
correct,
we are more expensive also. So it will be a play of who is cheaper and who brings the most value thereabouts.
Now, talking about cheap stocks to pick up, you did have one of your picks, Jollibee. There is a bit of news there that Jollibee has just finished acquiring 100% of Smashburger. How do you think this piece of news will affect the stock today?
Smashburger is 7% of Jollibee's revenue for the year. It goes hand in hand with their goal of getting 50% of their revenue from overseas markets already, which this is something good that Jollibee is following on with what they declared, that they will try as much as possible to earn from overseas. So when people think about Jollibee and already, it's not anymore just an investment in the local market, but it's a local player with multinational operations already. So Smashburger, I think, is a good play for them because it will allow them to have, they have 300 stores in the US, so it allows them to have a larger footprint and they can control it the way they want it to be. And from what I believe, they're going to bring Smashburger also in the Philippines. So a little bit of competition for Shake Shack as well when it comes here next year.
Jollibee opening, however, in the red, just like our local boards, down 0.3% to 297 pesos. Now, what are the charts telling you here in terms of Jollibee's upward performance already?
Okay.
Is it already overbought?
Two things. Number one, from where it is right now, Jollibee's expensive. It's an amazing company,
Gotcha.
good growth, PE ratio-wise, valuations-wise, it's expensive. Even if you look at its value for 2019, it's expensive. That's one. Number two, from a technical perspective, anywhere around 300, Jollibee is around its resistance level.
Okay.
So if I am a person who wants to buy and sell this based on technicals, 240, 242, somewhere here, that's your support level. If you've seen it, every time it would bounce that levels for this year, every time it would hit those levels from this year, the stock would bounce and hit up. So 240, 242 is a good support level. At around 300,
kind of expensive.
It's kind of expensive and it's at the resistance. But if it breaks out,
I think that's the Miss Universe of that. Okay, go on.
If it breaks out from the 300 plus levels, just using the principle of chart patterns, it could hit around 350, 360 over the mid to short term. If it breaks out, stays above 300. The caveat there, it needs to stay above 300, 305 levels for it. But if not, it could probably just retrace. But at the end of the day, moving average wise, it's bullish and it's still poised to move up. And my goal is to really follow the trend. It's telling us it's bullish, but close to the resistance.
And about this, let's delve a bit deeper into Jollibee getting 50% of the revenues from abroad. How are the global risks going to be, paring back in? Because before you were looking at inflation as hitting the consumer space. Now there's a lot of other things hinging on the future of Jollibee. Can you elaborate on that?
I think their plan has been amazing. Number one is they would go to areas where there's a lot of Filipinos. They would open the Jollibee brands or the local brands in areas where, in countries and cities where they know there's a lot of Filipinos. Hence, that's why they're expanding in Toronto and London, Rome, which there's a good base of Filipinos there. But above and beyond that, they're trying to tap also the local market in those areas. Even if you try the Chicken Joy in the US, it's a bit spicier than the ones that you have here. So I think the main goal is also to get a piece of the local market wherever they are. But if you've been following what they're doing, they've been buying up Torta Frontera, which is a Mexican brand in the US. They've been buying Tim Ho Wan, which gives them exposure to the Southeast Asian market. So they've been buying up good brands with good following already. And if it's managed properly the way Jollibee would do it, I think it would give them a big and larger boost also for earnings. So It's when you invest in a company, you look at the track record, you look at how good the management team is, and that's what Jollibee has. But above and beyond that, Jollibee has an amazing brand. That's what people will go for, and they also keep buying companies with amazing brands as well. So in large inflation environments, Jollibee, if you look at it, a lot of the stocks have dropped, but Jollibee at 240 held its ground.
So fundamentally strong, but a bit of a mixed bag there from our analysts as well. Just as you said, possibly the price being already too expensive, even for such a great stock.
It's just really based on valuations that it's expensive. If it were me, I'd want Jollibee to be at something reasonable, so I would come in as well at a cheaper price.
Okay, now Marv, I'm going to move on to MPIC. As we actually hear our newsroom enjoying that screaming from Catriona Gray actually meeting the top 10 of this universe, guys. All right, moving on to MPIC, your second stock pick. Tell us, this has been a battered stock. I think it's down more than 30% year to date, despite, pretty strong earnings figures anyway. Why are investors not picking up this stock?
Beats me on why they don't want to see it at a particular perspective. But what I know is this: the fundamentals
very low compared to moving averages.
Yeah. So let's segment it from a tech perspective. It's pretty much bearish. There's still no reversal in sight. Since April this year, it has ranged from 4.3 to 5.3, 5.5 level. So it's consolidated with a larger bearish bias. But fundamentals, it's amazing. Earnings growth has been there steadily and increasing over the past few years, over the past 5 years, consistent growth. I think if there's one thing that people might be concerned of, is its debt. It's highly leveraged. But if you look at it, what they're doing, when they borrow money, they use it for their infra projects, which really is capital intensive. So the payoff for that will be later on. But for me, look at all of what they have. From Meralco, Maynilad, their toll roads, these are all passive sources of income. These are things that, regardless of how inflation would go, people will spend on them and they will make money. And I guess Maynilad also, it's making money in spite of the rate hike not being there yet. So imagine if the rate hike gets approved in the next few months, it could be an additional revenue for Maynilad as well. And lastly, valuations-wise, PE is at 10. It doesn't get any cheaper than that. It's at the lower end of its PE range already. It shows you that it's relatively cheaper up against other conglomerates as well. So you're buying a cheap company that's super defensive, that's growing, massively growing, and it's something worth buying. If it doesn't go up for the first 6 months for this year, they can safely hold on to it because they're buying something that's solid and cheap and amazing.
Okay, so you joined those 1,300% consensus buy rating, actually, Marvin, for MPIC. Now, just to wrap up, I want to ask you on your positioning for 2019. You did say you expect it to be a better year. How should investors position themselves? Should be looking at the top companies, second liners? What's your
for people who are investors who have a relatively longer time frames? This is an opportunity already for them to gobble up a lot of stocks that have been cheap. Security Bank below 140 was amazing. GT Capital below 700 was amazing. You don't get discounts like that. Ayala Land at 38. Below 30, it hit even 36, 37 this year. Those were amazing discounts. So if they won't look at the fluctuation, it would allow them to position on stocks that are really, really fundamentally sound, but they've been battered just because of price. So as the fears of inflation and the rate hike might ease off next year, you will see some money start to move back in our markets. And sayang, it's time for Filipinos also to make money. Foreigners, when they make money, they come out. But Filipinos, when they're there, it's time for us to make money off our markets as well. So I hope Filipinos position and take advantage of this opportunity.
Let's hope for that. As you mentioned, one of your turnaround stocks, Security Bank, is actually the worst performer year to date, down 35.9%. You're hoping for a turnaround for that bank next year. Now, just to recap, PComp, the PSE index up again, keeping its head above 7,500 today. Thank you so much, Marvin Guillermo, Stock Smarts.